Hey everyone, welcome to another Foundation Capital Roundtable. This week's been pretty exciting. You got Mitt, PV, and Jeff here, trustees at Foundation Capital Private Real Estate Trust, talking about the highlights of our week this week. Guys, it's been pretty crazy this week. We saw the spring economic statement come out from the majority Liberal government. The day before, they announced the Canada Strong Fund, where they're going to be seeding $25 billion across 3 years to basically co-invest with other private industry players to basically build out infrastructure. So if you guys follow me along on Instagram, you've probably seen my videos or my YouTube video kind of highlighting that. So it's pretty interesting. I think quite a bit of it is the government basically trying to spur private sector activity to basically de-risk themselves as they're looking to execute on some of these infrastructure projects where they can get a return on their money and then keep reinvesting it in infrastructure projects if they execute it well. I know when I launched my video, you got people on.
You got some haters.
I got quite a bit of haters. Yeah, I got some people being like, "This is a slush fund" and whatnot. And look, I don't know what they're going to do. I mean, in principle and an idea, it makes sense to have a sovereign wealth fund. I think the big pushback was, oh, well, they're just issuing debt. Mm-hmm. In order to do it, they don't really have like assets or, extra revenue they're generating from, let's call it mineral sales or oil taxation or something to justify it. But it's pretty interesting when some people brought that mindset into place, because it's kind of like, in my opinion, to be honest, Canada is one of the lower ratings where we're at, AAA rating. We can issue debt at about 3.5%. If the government can invest and make 10% plus, again, if all executed really well, there's excess cash flow that they're generating that they can then distribute out to the citizens, right? And I know in our previous streams we've covered the amount of people who are relying on some of the government benefits or government subsidies continues to increase. And if you were to cut all of this kind of stuff out, or try to not provide these benefits and balance the budget, then people would suffer and they'd say, "Give me my money. Where do I get that?" So I think it's a smart move where the Liberal government knows, like, look, they're not going to cut these subsidies and grants that they're going to be giving out to people. They're going to, if anything, increase it. So they have to come up with a new method to continue to generate cash flow to then compensate for this until your population continues to increase and your portion of population becomes a larger amount of people in the workforce than those who are relying on benefits. Anyways, that's my 2 cents there. Guys, any thoughts on the Canada Strong Fund?
But I would say pretty interesting opportunity, especially for developers like us who are already working to solve Canada's housing problem here. If we can partner with the government and have access to capital like this, not only is it going to create a return for the government, but it also solves another problem, which is the housing shortage. You guys have heard us talk about it many, many times, especially in core workforce housing. There's simply not enough units to house the demand. So it ends up being a win-win situation where the government can get that return, but also have that shortage be reduced by financing and funding developers like us. So excited about that.
I think the first thing that kind of came to my mind when busy work day, and then the news headline pops in your phone, and it's like, are we trying to be a little capitalistic like America, like come up with these the funds for the Canadians? So I thought that was positive. We'll see if it executes, but I thought it was a little Trump of Carney.
I think regardless of even if it fails in execution right now that, let's call it, that entity or that idea exists, whichever government next that takes it over is going to have that ability to say, if they cut the spending, if they're able to create that surplus, they now have a team that's going to be able to run that. I think ultimately it's going to be up to the shareholders, aka the citizens of Canada, to keep them accountable, to make sure that we get the right people in place, managing it, executing it, generating those returns. Because that's what's going to pay for some of the stuff, right?
Yeah. I wonder another, question I have with it, is remember when we went to the Real Capital conference? I think it was 2024, and a lot of the big players and institutions, the common theme we kept hearing is that Canada is littered with great investment opportunities, and it's a great place that in theory you could put money in, but a lot of international institutions and organizations were hesitant because of the political climate and the way the government was being managed, etc. I wonder if this is a step forward to, I guess, reinstate confidence in the country and having some of those institutions come back and be willing to put dollars in Canada as well.
Yeah, I think a big thing has been signaling and communication, right? Is that we're going to build these projects, we're going to execute it. It's going to take more than one term of a politician's time for some of these projects to execute out, right? You've got super energy projects that they're looking to implement, some larger mines. The build out of those outlasts a single term of Mark Carney's. So a part of that is saying, look, even if the federal government and the politician, the MP, whatever changes, this entity, Canada Strong Fund is what's going to exist, whether it's the Liberals right now, or it's the Conservative next, or it's the NDP, or it's the Bloc Québécois, it doesn't matter. This organization has now committed to invest in this major project, and they're your limited partner. They're going to be around to fund and be part of the project throughout its execution. You don't have to worry that your capital is just stuck and you're screwed. So it makes you as a private sector individual. So say you're a big multinational, you're like, yeah, this makes sense. The government's tying up their money. They're going to put it for risk. They're not going to just let it burn out, hopefully.
Mm-hmm.
So they're going to come collecting for it. So they're going to make sure the project gets executed so they get the return. So who wouldn't want to say, oh my God, well, it's the government. They're going to make their money always, right? We know that. Mm-hmm. So if the government wants to make its money, it's going to make sure that approvals go through, the projects get done. All right, I'm a multinational enterprise. I'm a Korean company, or I'm a Japanese company who's got a lot of capital. I'm now confident that I'm willing to put $100 billion into the project, because let's say the federal government puts $10 billion in, right? And there's always the grants and the incentives or the tax credits that they always push, but that isn't enough, because a lot of these guys will then take the projects as a multinational and look to get financing from international banks, right? And so they'll say, who are your other limited partners available in the project? And we know this because we go out and we raise capital, and people ask us, well, who's your LPs, or who's investing in your stuff? And we have to talk about the different family offices we're chatting with, the different high net worth individuals. And the fact that it matters for us, we have a lot of retail eligible investors involved as well. And we communicate that. So, if it was a pure retail fund, you can't really go and say, hey, I need $100 billion, working line of credit so I can do a project build out. They're going to laugh at you. But when you say, no, the government of Canada is my limited partner, or they're in for, it's called the 10 billion. They've advanced 2 billion right now based on our progress. Then we're going to do more capital calls. Can you give us that working line? And so that's how they're going to generate that return. It provides that signal and confidence. And it's interesting because they're obviously doing this through twofold, right? They're issuing bonds that are being sold to sovereign funds who see their currency depreciating. It's funny because we hear a lot of the rah-rah of, oh, America, this, and it's like, that's great, but there's a lot of people from other countries that don't necessarily want to place their money in America, and they don't want to worry about their currency depreciating over time, which is happening with these really rich families and individuals and companies overseas. So they say, I'll go out and buy a Canadian bond because I know the Canadian dollar is relatively going to stay relatively strong. It's not going to depreciate against it. Maybe it doesn't make me a 10% return like I could be investing in my own business in my local economy, but I'm going to lose against depreciation of my local currency versus I'm getting 3.5 with the Canadian bond and the value's holding through. So for them, it's a real store of capital and safety. So now the government's got this 3.5% money that it's investing and generating excess returns. And again, it's going to fund that difference in lifestyle for folks. So I think it's pretty positive. It's pretty good. I think again, in idea, I don't think anybody can disagree really that it's not the greatest. That's not a pretty good idea and a pretty good implementation to try to solve a current problem that we have and to spur a lot of stuff in Canada. One of the other sides is, oh, just cut your expenses and then we'll make a profit and do that. Do you know how long it's going to take to do any of that? Even if you were to start firing a bunch of people in the private sector or public sector, right, to reduce your costs as a government. You're going to start cutting funding across the board. You're going to have a revolt of people and people being mad. So, when we're looking at this deficit from a federal government budget standpoint, a large portion of the deficit is already debt that exists. It's $54 billion annually is our interest cost on the debt. So when you're saying there's an $86 billion fucking deficit, or like $60 billion something dollar deficit right now, 56 of that is our fucking interest costs. Okay, so what are you gonna do? You can't cut your so the way you're gonna cut to reduce your interest costs and pay down debt is cutting core services to people, and that's not sustainable. Like, we deal with people in our portfolio every single day, like hardworking Canadians, working class Canadians, and those who are on government subsidies, right? Paying $1,200, $1,500 is already hard enough. Now imagine for some of the folks who are on the government rent supplement, right? They're getting their ODSP for $1,400. They're getting a $600 rent supplement, and now you're telling me a government's going to come in and it's going to cut the $600 from these folks? There's no fucking way. No. Sorry for my language. I got to bleep this out, but like, you can't do that.
Monetization.
You're not going to be able to do that, right? So how do you self-sustain the fact that you've got a larger and larger population that's going to continue to need these benefits or increased benefits? You got to generate more money, right? And what are they going to say? Oh, well, how does the government generate money? Right now, a government generates money through taxation. Well, everybody hates freaking taxation. So they're going to say, okay, well, make the companies make more money. Okay, well, how? Okay, well, you're going to have to lower your taxes right now. Well, then you're getting less money right now. Your deficit's increasing. So you have to come creative. So you actually have to give kudos to the government. I think we all know where we lie in the political spectrum of things, where we always think you should have a balanced budget, excess should get invested, whatever. But we're in the conundrum that we're in, and you've got to come up with a creative solution to do so. And I think this is an interesting way to solve it. And it's going to allow the private sector to build with confidence again on these infrastructure projects. But the excess capital can go into investing in Canadian startups and other Canadian businesses so that young entrepreneurs can get off the ground. And they're not going to go to America, to Silicon Valley, like most of our folks do, to go raise capital. That's literally where we're having a huge brain drain, where that capital could be staying in Canada if we had more investors. Except Canadians are risk adverse. They shy away. So when they hear something like this, they're like, oh, no, the government shouldn't do that, this, that, the other. It's like, what else are you going to get? You want the exact same thing running for the next 10 years, and your deficit is just going to keep increasing. Because you can't outbeat the interest costs. What's your plan? There's no plan. There's literally no way you can do that without creating excess revenue or something. What have other governments done in the past? They've sold off private assets. We don't want to do that. That's a terrible idea. Like, why would we do that? Once you start selling on private assets, then your citizens pay for it long term. If we look at the 407, that's a great example. They thought they got to create. I'm pretty sure it was a conservative government who sold the highway at the time, and they were like, "Oh, it's a great win." Now, I don't know about you guys. I take the 407, and it's like, "Fuck, this is so expensive. I don't want to be paying for it. This is insane." Like, this money could go straight to the government instead, or something, the province, and solve a lot of problems that we have now. So I think we have to look historically at our stuff, and I guess it's interesting that we can appreciate this because we're applying this again to our business and how we are looking at affordable housing, where we're like, people hear us saying affordable housing and how we're focused on that. Like, average market rents in most of the markets that we're in is higher than what we're renting places out for. Affordable rent does not mean you have to do only $600 rent. That's deeply affordable. There's obviously some units that we look to do that. As we have affordable housing fund or development funds, we are doing a portion as that. But that's with impact investors who are looking to make that change and that focus, and with what we are contributing towards it, not our LP investors for the for-profit side. However, the for-profit side allows us to create additional affordable units, and it's that merger of market rate returns, which is on a commercially reasonable basis, which is what the federal government is saying it's going to do, combined with the social aspect, which is like, they're going to go make market returns, and then they're going to give that money to then fund, likely, their social causes, which is the government, the benefits that are flowing down to the tenants and other citizens of Canada. So it's pretty cool that we are looking at our business model and applying some of this as well. And I'm going to stop there because it
was an epic good rant. I hope YouTube loves it. I think, like, if any investors are listening, obviously, like, Mitt has been diving into the weeds of the macro, and sometimes, like, I can be getting into the weeds of the micro of a toilet or something, making sure that the repairs are happening at the low level. But now the macro, not just at the municipal level, not just at the provincial level, but also the federal level of like trying to get all these grants and stuff for affordable housing. It's just exciting what Foundation Capital is going to be moving forward. And just, this seems like a switch has hit in the last, what guys, like 4 months, maybe, with the development and everything. And we're streamlining and we're in meetings. It's like, if you're on the ride right now, it's going to be good, guys. So we appreciate all the current investors who are in the FCP rep, and also the new investors in the development right now as well too. And just like you're saying, Mitt, these government agencies are reaching out. They want to rent these places. You know, they are below the market rent of some luxury one bed. We are providing it at a lower level. It still cash flows within our portfolio, and the tenant gets a safe place to stay. The government backed rent, everybody wins. So I'm pretty happy with how that's all been going. We've got St. Leonard Society reaching out to us. We got just counties reaching out to us. We got just different municipalities asking if we have apartments. So it's pretty exciting times for that. And these are good applications because they come government backed. So if you're an investor, it's positive that we have this. And now we're just going to start doing this at scale with the development. So right now, London, Ontario, we're full. Like their vacancies, like we have nothing. Like people are bugging me for apartments. I don't got anything. Ingersoll, we're full. St. Thomas, we got a little bit of the spring turnover, but everything is pretty full in these main core areas that we need more apartments in London, Ontario right now, clearly.
Yeah, I just wanted to add on to that, Jeff. I think what I've noticed throughout our journey is a real big chunk of it is being positioned in the right thing and then being positioned in it early. You know, we got into multifamily at a good time. We positioned ourselves and then we positioned ourselves early. Now we're positioning ourselves into development and affordable housing. It's the right position and we're getting in early. We see that there's a need in the marketplace. And I think doing things like that in the long run is what has allowed us to be successful. So now we're making our new pivots, and then 10 years from now, it might be a different position that we'll be taking and getting in there early and capitalizing for our investors. So it's pretty cool to see.
Wait, PV, we launched a fund during a pandemic.
Yeah. I meant the asset class. We were in multifamily much before anyone. And well, that's a perfect example too. Look at all the guys who are losing their shirts on condos and commercial real estate and office. We were in the best asset class that was the most recession resistant and has been weathering the storm better than any other real estate. So that's a perfect example of how we were positioned correctly.
Yeah. Half the real estate agents are gone. All the condo speculators gone. Yeah.
I think a big thing is, like, again, as we are discussing in our weekly meetings and our assessments of like the market as a whole, I think for people who are listening or watching or anybody in general, like in your own business, it's always important to take a step back from the day-to-day and look at the big picture. And I think what we're all trying to convey is that over the course of our decade plus of being real estate investors, where yes, me and PV are CPAs, Jeff was in Afghanistan protecting defense ministers, and you know, maybe he would be boots on the ground. You wouldn't expect us to be boots on the ground, but even a decade plus later, like, we know what the tenants are saying, we know what the problems are. We are still actively involved in a lot of the core issues and understanding, because it's let's call it the Amazon or Bezos mentality, in the sense of you need to truly understand the pain point of your customer and solve it. It's more of like the venture capital mindset, which is like, you need to solve for that true problem. And what everybody wants, and it's funny because we've gotten these comments over the years, is like, why don't you just do, like, you know, these nicer buildings and stuff like that? It's like, yes, that is sexy and easy is fun, which is why that's in the tank right now. And, you know, for some people, they like that. That's what they want to do. We actually want to solve a problem that most Canadians are facing. And we've gotten to see that since we've started investing over a decade ago, plus into this asset space, that like this area is in a very high demand and need. And I'm sure the guys and I can attest, like, yes, we know how to navigate, and we're navigating through the different municipalities and the different community of adjustments and the OLT and all that jazz to create additional units. You get to hear the nice side of, yeah, we got approved, or yeah, we're working through it and it's happening. But there's a lot of ups and downs. Like I know we know a lot of real estate investors who talk about the BS that we have to deal with sometimes, because, you know, I'm going to be honest, the federal government and the provincial government are doing a great job with all the incentives that they're trying to implement for affordable housing and the fact that they want to fast track stuff. We're now come down to the municipal level where the municipality has to basically give the approval. And you've got, some of the local MPs or MPPs or whatever, the local politicians actually approving and being supportive in some of these areas. In other areas, maybe not so much, but the holdup is actually the underlying city staff. The underlying city staff who hide behind the veil of being within their municipality, who are making these decisions, and they're doing it not on a merit basis, but on their version of what they think determines or should be best for their city. And they're coming with their clouded mindset of the private sector's bad. I work for the municipality. I know what's good. And the reality is, if you want to solve a problem in a nation like Canada, where it's grown extensively, where affordable housing is deeply needed, you need to work in collaboration with the private sector in order to succeed. Public-private partnerships are necessary to solve major problems, and I think that's something that I think a lot of municipalities are going to start seeing the hard truth on. And I think a lot of staff should be worried that they're actually being a detriment to their communities. It's very funny because we're obviously in the apartment space. These individuals who are, let's call it higher up in the city staff, they live in a $1 million plus nice home well far away from where our apartments are. They do not know the daily life and the challenges that are being faced by those folks. We are the individuals who have to navigate the landlord-tenant board, dealing with the underlying issues that these people are facing. We are trying to build safer, cleaner, and affordable communities for our people. And if you're not looking to do that, then you know what? I think some of these staff members need to step down and start volunteering or doing whatever they need to do, because what they're doing right now by holding up the process and delaying things, you know what it's doing? Because at the end of the day, a lot of developers, a lot of people are still pushing forward and ahead, and the city, the citizens, or the towns, the people are effectively paying for their Bay Street lawyer and their other folks to come to court, push the cost up, so that by the time a settlement of some sort or an agreement is able to be reached on what can be built or what can be done there, guess what? All that time and cost of holding costs that a private sector individual had to hold, they're going to have to factor in regards to how they're going to make their return. It doesn't have to be like the most highest and greatest return, but now you've cost them time and money, which now needs to be reflected in kind of the rents and number of units being obtained. And at the end of the day, if you're going to end up at that same end position, why couldn't you have worked at it sooner and actually been proactive to find a solution that works? And I think in America, I think we've seen in Miami, that's what the mayor has been really successful at doing, is getting both businesses and developers to come out and build projects like that to kind of address those needs. I think a lot of the Canadian smaller towns and towns as a general need to look across the board. The unfortunate part is the staff aren't being held accountable for their decisions right now.
Yeah, there's those real estate terms where, not in my backyard is like the public, but then it seems like it's not in my town. It could be municipal staff. And then when you learn real estate in whatever city you're in, you'll have stigmas within your own city where you'll be like, oh, you never would buy across this street or something. That's just like the stigma in any town you guys are listening to right now. And then clearly these municipality people are also, they got a stigma with, well, I don't want outside forces. Where outside forces, like Toronto has bad rap, right? Even in the real estate agent world. Anytime, oh, it's a Toronto agent. Oh, it's a Toronto developer. There's just like some fictional big bad person that the little towns don't want, right? It's just a weird stigma. So it's change. Canadians hate change, and these municipalities want to like hold it here, and then you got to go.
Yeah, but you know what's funny? When you're a town or area of like 40 to 100,000 people, you're not small anymore. Mm-hmm. You're not small. You're not a 100-town person or clan where you're gonna like keep people out. You have to think of creative solutions, because how do you survive or how do you succeed as a town? I think we all as Canadians want,
and they're just focused on micro too much, right? They just want to get their coffee, come in, go home,
Yeah.
I'm not saying you're wrong. I'm just saying what the human nature of these people.
No, and look, we understand that, and I think obviously a little bit of that comes from the fact that there's good and bad players in every space. right? That happens. We're not saying, okay, it's just municipalities are bad, developers aren't bad. It's like, yes, we should be able to come to agreements, whether that has to be legally binding or whatever, to be able to come to stuff to solve the problem. Trying to build brand new apartment buildings to solve the housing crisis, we're not going to be able to build fast enough. You have to do adaptive reuse with existing inventory to create more units, and there's got to be a better plan. And there needs to be a better plan across all these municipalities in order to actually address their underlying issue.
Well, they got to use facts, not emotion.
But we've been in these meetings, right? And it's how funny is it when our individual is going through.
They say I feel all the time. It's like, okay, well, you feel. Where's your facts?
Yeah. And it's funny because we're in the business of investors ask us what's going on, etc. You can't be like, this is what I feel. It's like, nope, facts. This is what we're doing. This is how we're doing it. This is what we've done.
Exactly.
Yeah.
Like, I feel there should be more parking spaces. Okay, well, the facts are there's a traffic study.
Yeah.
That kind of stuff.
And that's the difficulty. Again, that person's making a decent amount of money. They live in a home. They have a car. They're driving in. They don't recognize that the person who's on ODSP and a rent supplement, between paying for their rent, for food, clothing, and some, let's call it personal entertainment, affording a car with gas and payments is too expensive. They're going to have to take public transit. Like, if you're telling me you have to have all these parking spaces, then what's the point of public transit? You're then telling me public transit doesn't make sense in your township. Is that what you're trying to tell me?
A little segue, but similar. There was a report today or this week or so where 18-year-olds to 32-year-olds are consuming way less alcohol right now.
Yeah.
And I went to the comment section because I just wanted to see like what the public was saying. It's all financial. And maybe marijuana got authorized in 2015 or so, right? Whenever Trudeau did it. But it's all financial. Like, oh, I can't afford groceries. What am I going to go buy alcohol for? Like 3 margaritas, $60. Then you're saying, well, where am I going to get my car from? This is the kind of way it's going, right? Like that's the last thing they're looking for right now is the car. They just want shelter to start with. And then they don't even have a house to buy alcohol and get drunk. So, it's just the way the economy is going on the macro level. They're not going to go spend the money at the LCBO and stuff like that.
Yeah, and I think for us, I mean, some of the conversations that we've otherwise had is like, how do we spur the economy in our local regions, right? Obviously, with the repairs and renos that we do and the people that we hire local on the ground to deal with stuff, we spur the economy that way. But as we looked across the board, we're like, oh, Build Canada Strong is trying to implement a number of, Build Strong Fund. Canada Strong Fund is investing in certain infrastructure projects. But we look at what are the other things that Canada is known for that can do well. And obviously, individual Canadians need to be able to participate in it. Not everyone's going to be willing to go to the Ring of Fire in Northern Ontario to work. So we've got to create other alternative industries and stuff like that. And so it's been very interesting for us engaging with different stakeholders at the provincial level on different incentives and programs that they have for us to say if we want to get into manufacturing for components of the homes that we want to get into. More on that, we're looking at some potential solutions to hopefully help address homelessness and transitionary housing as well. So it's pretty cool. I think it's really nice that we're obviously clearly passionate about the local communities that we're involved in and looking to solve a real problem while still generating return for our investors. And I think it's a pretty cool initiative to be part of. So I think thanks everyone for watching. I know it's a lot longer than our usual videos, and you've had to hear from me way too much. I'll leave it to PV and Jeff to say any final comments.
I guess before we sign off, today's the last day to get in at our current unit price of $13. So guys, be sure to reach out and we'll get you the next steps to get in before that day.
Yeah, why did we pick this date? We got tomorrow the unit price will change. We got rent collection, we got move-ins, we got move-outs. There's so much on the go.
Yeah.
Like and subscribe, guys. We got you.
Perfect. Thanks, guys.